So a lot of our clients come to us asking about leases versus loans. We get that all the time. Can you tell us the main differences of each and how does our team at Prime guide them in choosing the right option for them?
It's an excellent question. I think it's less complicated than it might seem. The primary difference between a lease and a loan is just in the title. So if you are going to acquire a piece of equipment on a lease, the leasing company purchases that asset from the supplier. The invoice is billed to the finance company, and the finance company takes title to that. There are different tax benefits to that because then you are just using the equipment and you can write off 100% of the utilization cost of that. So if your payment was $1,000 a month, that becomes a rental expense for tax reasons. And we won't get into what all the accounting rules are on that. Suffice to say, there are differences in the tax and the accounting treatments, and I highly recommend that you talk to your accounting expert to get informed about what that means for your business. With a loan, however, the finance company pays for the equipment, but they're paying for it on your behalf, and you are the titled owner of that equipment. The difference is often we see this for kinds of assets where there's a registration required. It's a motor vehicle good, a trailer, or a truck. Somebody wants to have a loan on that equipment because they want to have title to it. They want to have the registration in their name. Fundamentally, though, they are the same. It's a finance contract. The collateral for the contract is the equipment. That doesn't change. Both times the equipment needs to be insured. And in both cases, if you don't pay the bill, there's repercussions to get that. So it doesn't vary in terms of the obligation. It varies a little bit in terms of the paperwork. There's a little bit of a tax difference on a loan versus a lease, where you're going to write off your principal and your interest. So that's a little bit different. The GST or some of those acquisition or consumption taxes, GST or your HST or PST, can apply differently on a loan versus a lease because you don't charge taxes on loans versus a lease. On a loan, you'll end up paying the taxes up front. So that's another way where a lease may be better if you're trying to be very conservative on your cash flow. Although with taxes, then you make your submission to the government and you should get that back, and those can be structured into the contract. So I think there's lots of ways where they are comparable products, and the difference is what are you willing to have as your obligations, as the accounting impact, tax impact, and the title impact.